Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Brad Stroh, co-founder and CEO of Achieve. He joins us for Financial Literacy Month to discuss recovering from financial setbacks and getting onto more sustainable financial trajectories. Brad, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill. Great to be with you.
You got it. And Achieve has been around for over 20 years, so you've seen a lot of economic shifts. The last year has been tumultuous for fintech companies and financial institutions. How has Achieve weathered through this?
Yeah, the last year has certainly been interesting. Over 20 years, we've seen several economic cycles, lots of fintech fads, and now a pandemic. The last year definitely was a cooling off in fintech land. For us, a couple of the themes and principles that have allowed us to maintain success is first our commitment to our mission. We've always been a mission-driven business focused on helping American families deal with debt problems and helping the struggling, striving population get back on their feet and back onto a brighter financial future. We've stayed really committed to that mission and that vision over 20 years. Some of the product principles that we've been through that allow us to sustain cycles a little bit more effectively are we're a multi-product platform. So we've got HELOCs, we've got apps, we've got a debt resolution product, we've got a personal loan, meaning we're not one product trying to apply that to an audience through multiple cycles. We're counter-cyclical. And then lastly, from a growth and financing strategy, we've always maintained conservatism. We've never gotten into high burn rate. We've always tried to provide value and be a profitable, successful, growing business.
What are you seeing in terms of the economic impact of inflation on consumers' wallets?
Yeah, so the past year has been really stressful on the U.S. consumer. We see it showing up in our numbers and the consumers we serve. Just start from a macro perspective, we're at peak consumer debt. So there's 17 trillion of consumer debt, much higher than the great financial crisis. At the same time that interest rates have risen really, really rapidly, meaning the cost of that debt burden is higher than it's ever been on U.S. households. You marry that peak debt repayment costs with inflation that's just been ripping, and then real wages having negative real wage growth, it means the stress on U.S. families really has been higher than ever. You see it in housing, in student loan costs, in medical, and then that shows up in our numbers as consumers trying to consolidate debt, trying to get supplemental income sources, trying to pare back on expenses and cut back on their budgets, while still not touching their first mortgage or trying to refinance. The stress is higher than ever at the same time that there's a credit contraction. So the options available to consumers are lower than ever. It's been a really stressful year for consumers.
So Brad, how are you helping consumers through these tough times to get them on that sustainable trajectory?
Yes, so I think I touched briefly on our products. So we're a multi-product, solution-oriented company. We combine that with personalization. So a human touch, we've got several thousand employees that are having daily phone calls, helping advise consumers on what's the best solution for their needs across our multiple products, depending on homeowner who has less stress or a very struggling and stressed consumer. For our debt resolution product, we're trying to apply the right suitability-based product to the right consumer across our portfolio. At the same time, we continue to innovate with technology and grow our footprint to help what we think are 123 million U.S. households that are underserved by traditional financial products.
In recent months, we've seen a rapid expansion of buy now, pay later. Are you seeing an impact of BNPL on consumers that are already in debt?
Yeah, we do see it. We do see it. That's been an explosion of consumers borrowing on buy now, pay later. I think people thought it was a credit card alternative. The reality is what we see is it's another source of debt and stress on consumers. In particular, in our debt resolution product, we've seen the growth of the percentage of people that enroll in our debt resolution product with BNPL products grow by 50% over the past year and a half. Huge explosion, which means that's another source of financial stress on consumers. Sometimes that lack of affordability gap that allows them to pull forward purchasing power earlier ends up with more financial stress. Of that consumer population, we see it with higher utilization, more accounts, and ultimately less stress on that, more stress on that consumer that has a buy now, pay later product. And we're seeing it in the numbers.
And Brad, finally, what's next for Achieve?
Yeah, more innovation, more growth. As I said, I think our TAM is 123 million U.S. households. So 20 years in, Jill, I think we're still just to help people budget more successfully. We're about to launch a get out of debt app. So free apps to help consumers better manage their finances. We're going to continue to introduce new products so we can lengthen our relationships with the consumers we serve and continue to grow and innovate to try to continue our mission-driven position of helping consumers who are struggling, striving with debt.
Great. Appreciate the insight, Brad. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.